All right, what's going on, guys? So today's going to be a quick little trade recap on Nike, QQQ, and NVDA. We're first going to start off with Nike just because, or actually, I'm going to do Disney as well. And we'll do McDonald's, Nike, Disney, QQQ, NVIDIA. Okay, so with Nike, what we had was we had our accumulation first initial signal and our first initial footprint left in the chart that was right off of this 1, 2, and 3 lower low accumulation. It happens in every different way possible, but obviously this was a much more coiled little range on the chart, and it was actually right after a huge markdown, right? So when you go take a look at the weekly on this was covering a lot of imbalance on this weekly bar. And essentially what that was all just really into is just a simple retest. They probably mitigated a lot of their losses in terms of buyers that were previously bidding this thing off of like 88 to 89. That's why you had that sell that was actually hidden right through the report. We had that sell all the way up here that extends on a gap all the way up into $89, right? And then ever since then, what happened was we pulled our ways lower and we just kept bidding ever since we pulled our ways lower. We got a really nice leg up on a 3-day continuation pattern, and then a ton of really low volume digestion leading into the report. And then that report was a relatively I should say, neutral candle spread that never really got the follow through on what looked to be a reclaim of what the previous like the range lows were, which were essentially just throughout this area. Around here, right? And then ever since then, what we got was we got a low volume sell once again, just all the way into new lows. And those new lows were created at where the old lows were a previous accumulation over here throughout August and July and just throughout that whole summer area after the markdown, right? And then once we got down to those lows, the character and price changed off a little bit, right? We had a big time sell on Nike that extended all the way down here. However, we had 1, 2, 3, 4, 5, and then 6 days of basing action going on here. If you guys go to the hourly chart and you take a look at Nike on the hourly, it was basically a sell climax with a 3 lower low on the hourly chart here. The first being a really nice strong opening day, and then obviously a lack of continuation, followed by another low and then a third low. That third low undercutting pretty much the entirety of the support from over here. Oh wow, it's different from a daily and in the smaller time frames, but 71 bucks was basically the area to reclaim. We reclaimed that area with a really nice strong tape. As you guys could see on smaller time frames, this was a really nice strong opening day, followed by a nice little pullback, and then just a really nice strong close. And then what we did was we basically just reclaimed the top smaller time frame resistance ranges from where the sell climax was actually starting from, the upper ranges of that area, which is right around here, right? That was obviously a clear hourly resistance off of like 72.30-ish. And then what we did was we pulled back, got a red to green move on that day. That's a very notable candle just because it's red to green. And that was also essentially, if you're pulling from lows into highs, that was directly off of equilibrium as well as just a retest. So we already knew that the structure was developing from the previous sell side trend, which was through the holidays. That's why I didn't hold a lot of relevancy to this being a relatively weak name, followed by a bid that was obviously moving up as we popped above the resistance, pulled back, and held the resistance as a new support on smaller time frames, as well as swing low, swing high equilibrium. And you always want to contextualize as to how and why that is happening. It's because we had a failure of displacing and breaking and basing beneath the old lows to create new lows, right? That would be a strong structural sell side trend. However, that did not happen. All we did was revisit the old lows and then pop above the old lows with a really strong day, followed by a red to green day on top of the resistance. And if you guys go take a look at my Twitter and what I talk about on my Twitter page a lot, it is about my entry model, right? You go over here and you guys see everything that's going on here. You see how I say strong high volume orb breaking the 1 hour internal bear structure on the LPS. Your 618 pullback into that orb is huge. All post spring, so after the spring. Where we can essentially find and see the spring on Nike, acting as a smaller time frame spring would just be the failure of displacing under these lows, right? That's basically your shakeout, and then you have a really strong 2 days of price action that were extending us all the way higher, followed by a pullback, right? It's actually somewhat similar to the orb. However, this is not on just a 1 day like intraday scale. Whenever I talk about like the orb and then the 618 equilibrium, like equilibrium to 618 pullback, this is more of two really nice strong days followed by a red to green. But that pullback being on top of the resistance or the internal bearish structure, meaning the lower highs, right? These were previous lower highs that are now turning into higher lows, right? So now we can essentially say that buyers are moving up because it was a red to green move, and then you have really nice consolidation off of those areas, and then it's going to lead to a recorrection back to the upside. Now, the reasoning as to why I really like this chart is, one, you have to look at the previous areas of price action and see if there was a really true big seller anywhere off of these ranges on Nike, right? And there really wasn't, right? We had a pretty low volume sell that was leading us into the new lows, and then we really had no volume, but the volume actually ramped up just ever so slightly as we got into those new lows, as you could see, as the volume started to peak out a lot more heavily throughout that area. Now, when we're looking at your trend line perspective from current high, swing high into these lower highs into this lower high, it was basically cracking through that Monday, January 27th, right? And if you go take a look at the 27th on the S&P, we were down 1.41%, right? So these names were a clear standout, relatively strong name leading into the new week. And then when we go into smaller time frames, once again, we could start seeing how this was the trend line break, and this was basically your strongest, biggest, most vulnerable momentum candle to play with right here. I mean, look at that hourly candle here on the first part of the day. And yet again, with my entry model, it's a strong opening range breakout. This is your opening range, and it led to a breakout, followed by obviously swing low, swing high, most recent impulse to the swing high, 618 retest, and that's also right off of another hourly level of resistance that we have as well, right? And remember I talked about it's got to fail the previous lower high attempts, turn those into lower higher lows. That's exactly where we took the scale or the size into on Nike. And this was a very well-planned trade, as I was talking about this, all the way up here on a retracement down into the 618 or down into like the 75 to 74 territory. And then that's whenever everything was a super nice opportunity to think about scaling into some longs, with essentially risk just being off of that area, this consolidation into the close. We had a big time buyer off of that with a hammer candle, and then just a lot of consolidation the next following day, meaning today's session. We ripped off of that area with risk being off of that afternoon low. And it was a really nice opportunity to obviously look for the new highs above this previous high, because essentially what we're trying to say here, guys, is that this pullback is not enough to outweigh the fact that this buyer was very heavy and was very strong. So with that being said, that was the Nike trade. Very strong relative to the rest of the market as well. So now we'll go over into some of the other names. Disney being one. This was a really nice size opportunity over here on Disney, where we had ads off of a reclaim of the earnings candle itself, right? So we have the earnings candle. We have to always mark out our very liquid candles. And we had a very big time bull peg here, which led to a premature continuation with no structural retest of the bull peg, and then higher lows, a reclaim of the earnings candle, and then a move higher. We had a slow grind, immediate grind higher back to the upside to then fill the bear gap. We got beneath the bear gap. We started putting lower highs on top of that bear gap. That's leading to me to believe that we obviously have to pull our way all the way to the bottom of the peg where the high volume is to be able to sustain a trend higher back to the upside. And this is where we had our earnings candle low as a risk for a daily candle closure beneath on a swing trade in the March or February expiration. Another thing, just a really strong name relative to the rest of the market, right? You guys go over into the S&P and you could see how on the 27th, we had a really, really, really ugly looking day. And you go over to Disney on the 27th, really strong looking day, right? So this was just a really, really, really nice trade, but the alignment was just a little bit weird for me just because of how sketchy I was talking about with everything being up towards these highs and leaving behind a lot of buyers in these gaps. Obviously, that whole entire uh, thesis really played out well with this being a huge gap down into the Monday, right? Same with the Nasdaq, right? We were trying to base these old highs and it looked really sketchy on this really easy grind back to the upside within a range that is dominant in terms of a distributions perspective when you're looking at all of the candles, all of the volume behind those candles, the candle spreads, and just the buyers not really having any true strong footprint anywhere within here that tells us, oh, wow, this is a change of hands. Buyers are strong now. No, we never had that. So we go over to Disney, and that was just a really simple, easy swing trade. And as you guys can also see, we also actually pivoted above the daily 9 and 21 EMAs, which were in confluence with the actual earnings candle low itself. And then what made me like the conviction even a little bit more is technically the gap is right here, right, where they tried to put in a support off of. However, sometimes you have to pull into the actual imbalance within the chart, which is where price action hasn't been within the range yet, right? Which is actually beneath this actual earnings candle low. So they try to create a support here. That obviously led to a failure and a draw lower into the actual peg itself. And then once we got the undercut and the reclaim, and then we actually got a daily candle closure above 110.37, which is the actual gap itself. This is the opening of the earnings candle, which is where we gapped up from the previous trading session's close down here at 102.72. We're basically just trading with the really strong movers that have a lot of intention behind them in terms of buyers really, really, really liking this thing clearly with a crazy markup and that sort of volume off of this range, right? I mean, this is the heaviest volume we've ever actually had within Disney since May of 2024. And the equivalent volume that brought also a 9.5% move to the downside. This was a 6.23% move to the upside. So actually, for the time being, it was a little bit higher if you're looking at the wick, but sellers took control for the time being, and then it had a nice strong day and grinded its way back higher, but that just wasn't ready yet, right? That's too overextended. So really nice trade over there, like a 70-something percent swing trade. Really couldn't get any better. And then you go over into now QQQ. This is an FOMC trade, kind of tying in with the NWOG, also with dark pool placements that are sitting all the way up at 529. So we have a large, large, large gamma pool and a very big, actually the biggest dark pool bid being down into the 590 territory. However, we have a lot of sell orders to the upside. And sometimes whenever I talk about like accumulations and distributions and whatnot, you typically have a event that aligns with catalyzing the entire thing going on, like the entire campaign, right? So whenever a campaign is building for distribution, essentially what you want to look for is a lot of balance in the chart before you find your upside. And we actually had FOMC today, so I thought that was going to be a short-term pop that leads us all the way up into that dark pool seller that sells off of like 608-ish, or at least makes a new high, right? And then obviously that would lead me to believe 529.60 on the Qs, right? And then that would lead me to believe that this is now a redistribution, and we could carry our way back lower all the way down into the gap fills beneath us and the huge dark pool bidder on 590 on SPY. That's a huge gamma pool as well. So all of those areas make up for a really nice confluence in terms of we have earnings throughout mid to end of week, Wednesday afternoon, Thursday afternoon, Thursday being probably a little more important with Apple. And the critical area on Apple itself, right, with this weekly candle and its closure. However, we go back over into something like QQQ and we could see how this was actually a very, very, very nice Monday high retest. And if you take off the extended hour, sometimes I talk about the NWOG itself. This was a beautiful opportunity to start thinking about buying into the NWOG for FOMC to pop us higher. The vol, I got crushed on vol in my 0DTEs, and then the vol got reinvigorated for the Powell speech, which brought a pump. That kind of rejuiced the vol in the contracts. My 0DTs went back to break even though my entry was literally right here at 518. And then we popped all the way up into 522, but that was a little bit later in the day, so those 0DTs went not minus 99%. They did go break even for a little bit of time on this candle, and a little bit green actually, but I don't really care about that. But I had a 13 DTE, which was risking the NWOG low right over here, right? The bottom of the new week opening gap, which was also the Monday high. As you guys can see, a huge gap down in the NASDAQ. Typically what it will happen is if you can control that area, as we had right over here, you'll get price facilitating back to the upside. However, we did not recollect those sellers off of the top of the gap fill or just in the upper extremes of the bear gap itself, right? So whenever we pull back, that was a really nice risk area to start thinking about taking like a scalp for the long side. And that was like a 28% trade, not anything too crazy, not anything too bad there. But yeah, that was QQQ, and I still do think that this one could reaccumulate its way back higher from a shorter, on a shorter scale, back up a little bit higher into the gap, and then eventually start getting the redistribution, and then we obviously go target the entirety of the gap fill beneath us, right? So, I talk about the discretionary sector, and I've been talking about a lot of these swing trades that are very, very vulnerable opportunities in the discretionary sector. We had a huge E. coli markdown on McDonald's, right, which was a major overreaction in my opinion, and we had a big time intraday recovery here where the name only actually marked down by the end of the day of minus 5%, right? And there was a lot of volume traded on that day. You guys go over and you guys take a look at the volume profile that was shown on that day. We had a big time buyer right off of rip. And then they built up a lot of support basically off of that gap territory. And then they kept taking attempts towards the flat top resistance, or I should say, towards the gap. And they could never breach into the gap and successfully develop a really nice trend back to the upside to fill it, right? However, what they did was they built up a lot of resistance throughout this range, which eventually led to a failure. The reasoning as to why that was a failure was just because we have a gap fill beneath us, right? So with that being said, what was happening was we had a low volume sell, just like we had over there with Nike, and it led us into the entirety of the gap fill on this day right over here, January 16th, right? And if you guys take a look at higher time frame structure as well, I mean, this is just a simple higher low on the weekly chart, right? I mean, if you want to pull up like the EMAs, it was reverting back to its 9 and 21 on the EMAs. If you want to go take a look at the daily, it was resting ever so slightly beneath, and then it got an undercut followed by a reclaim and a really nice strong day on January 23rd, which is actually when I took my entry. And then I was like, all right, I'm going to risk this daily level right over here, right? We had a big time daily level, which was undercut into a bull gap fill. And then this thing started to show off a lot of relative strength in comparison to the rest of the market throughout most of this time. So I took my size over here, risking a daily print or like a 1 hour print if it were to be really ugly beneath this daily level, just because it's a very clean undercut, and right beneath us was where price was drawing towards just to fill this bull gap. Right, we filled it, and then that's whenever we started to get a really nice push back to the upside. Whenever you're looking at swing high, swing low, uh, on the daily chart, we have equilibrium being tested right over here, okay? And that's also right off of the gap. and you go into the hourly and you start dissecting the price action on the hourly chart, right? I mean, guys, we had a big time, big time, big time market maker buy model that was showing here on the hourly chart where they started to uh, bid the gap, right, which then led to a new low being made, and then they tried to bid it again, and they started to build this flat top resistance above us with the bid beneath just hanging on ever so slightly to the bottom of the gap. And then we started to get these really nice strong openings that were just failing throughout the afternoon, push back lower, and then we started to just get higher lows ever since the gap fill, right? So structure was obviously now formulating for a market maker buy model here, and then that led to eventually just your SOS on top of the smaller time frame range, and then a really nice continuation back to the upside to then target the previous range, right? A few targets in mind for McDonald's would be the bottom of the range if you're looking at the daily, right over here, just right off of like 290, and then also that's basically just a level off of that candle. And then another target would just be all of this daily resistance on smaller time frames right over here. And then we can eventually reach the upper extremes. So with risk being here, as well as your entry being around this range, and then reversion back to the upside in a strong sector, in a sector that's seeing clear rotations. This one already obviously seen a really nice rotation into it ever since we took out this low. This was a really nice trade for me last year. Whenever we took out that low and then we started to put in crazy volume patterns that look like this. I mean, for the time being, when you're looking at McDonald's and you're looking at that volume, that was the biggest volume since COVID, right? And it was right off of a sweep of a swing low, and higher lows we're bringing that kind of volume, right? And then basically what we had here was just a daily flag, and then a continuation all the way back up into new all-time highs. So the pullback was really intriguing, especially with the gap fill, the undercut of the daily level, the reclaim, the relative strength, and then just the push back up into the previous range. Very, very, very simple trading there, and really good risk to reward. It's just sometimes you have to have the balls to be able to say, okay, yeah, like I'm gonna buy this with a lot of time, at least a month or more. Premium is good on names like this. The ATR is extraordinarily low, and you have so much opportunity in these names whenever you have a lot of the rotations out of the tech sector into these names. So, yeah, I mean, there's not really much more to talk about with that one. And I believe that's all there really was. Oh, NVIDIA. All right, yeah, NVIDIA is my favorite. The snapback rally trade. Okay, so this trade was fantastic. For one, being the fact that we had a major markdown of minus 17%. That is like probably 4x. That's probably, I would say, 3x minimum. 3x minimum over your 3 times the ATR on the daily, right? And this all happened in one day, right? It happened from Friday into Monday, a massive gap down right off of the LPSY. This was your UTAD, right? And we had a path of least resistance from the downside, right? So this thing marked down very sharply, okay? And then what we had the next following day, keep in mind, guys, the extensions here are really, really, really crazy when you're looking at this one from like this perspective of price action. I mean, this is just disgusting in terms of extensions to the downside. So what we got was a really nice hourly bar with a ton of volume traded behind it. I mean, dude, that volume is a little absurd, right? And what they did was they successfully soaked up all of that early morning sell, which was a bear trap to catch people into shorting the whole. They undercut the previous day low, and the previous afternoon was tons of consolidation, with actually a lot of the volume being more towards the lows, technically. There was a lot of volume actually pouring into these lows over here, right? And then we consolidated within the confines of those lows for a very long time into the close. We got a gap up, and then what we did was we consolidated or we dropped, and then we undercut the previous day low. This previous day low was also a ton of consolidation with a lot of volume coming in right here. So you guys got to think there was definitely a buyer participant that was trying to buy the dip that was essentially big money over here. And they held that level to a T. And then what they did was they got it over the yesterday's close, and then you just got some pullback opportunities off of that close, and your risk being off of like 118.51. I got in off of this candle, and then I got a little bit more ads on the pullback, and then I was just like, all right, yep, this is going to see a really nice reversion back to the upside. I took my first initial scale and smaller expiration. My further out expiration, what I was looking for was just back up into the range up here, like towards the gap. Obviously, I didn't want to really trade that all the way back up through there, but just in that general area, right? And there was no seller anywhere to really scale off of, so I just ended up taking scales right back up into this range once we started to see this like flag, and I didn't want that flag to fail on me, so I was like, all right, whatever. We're getting like the price action isn't really going vertical anymore. We got a lot of volume at the top of this candle, and then we're trying to flag off of it. It's a little sketchy to me, and the 15 just looked a little like weird. So I was like, I'm just taking profits because like this name, it was extended, but it's still seller dominant. It's just too extended to the downside. I mean, guys, whenever you have a 3% drop, especially on an overnight gap, like or not a 3%, a 17% drop, especially with an overnight gap that extends this far down, and then you get another sell afterwards. I mean, look how extended away your EMAs are going to be whenever you're looking at this on like your 5, or I'm sorry, not your 5, your hourly. They're really extended, and they're all the way back up into where that wick rejection was off of this previous resistance. So that calls for a really nice snapback rally, right? And as you guys can see, we had a big buyer participant on that hourly candle, right? And the higher time frames are king. So really nice trade there, and I was just looking for a long with on a little easy opportunity for this to move up into the gap. And it actually did reach the gap, but I didn't catch all of my P&L off that into the gap. So yeah, I mean, that was just a really easy, nice trade over there. And those have been my biggest trades as of lately. Not anything too crazy, but you can't be making any crazy moves right now. And I actually talked about this. If you guys want to go back and look in the Discord and take a look through all of this, I walked through the entire trade in terms of like yesterday with the NVDA setup that we had. And here was actually my execution. I'm long NVIDIA into FOMC. Only trade I got today, undercut of the previous day low, really big extensions to the downside, right? So we had huge extensions from Friday's close into Monday's open, and the intraday action, which was just a complete rejection and blood for the entirety of the day, was just a really, really nice opportunity for a long. And then I actually, with the runners on my February swing, I cut the rest of those because I was like, I only had a couple contracts because I was like a little scared, and I shorted this one on Friday, and then I covered most, unfortunately, on Friday. I'm still sick about that, but yeah, I mean, that was just fantastic. So those are the recaps, and I will see you guys later.